According to JPMorgan Chase, miners forced to sell Bitcoin can suppress the price of BTC. Bitcoin's decline is making it difficult for some miners to repay the $4 billion loan backed by their equipment. Here are the details. In a note Friday, JPMorgan strategists led by Nikolaus Panagiotsoglu shared their comments on the sale of BTC miners. It is already known that public miners, which make up about 20% of the total, sell Bitcoin in May and June to increase liquidity, cover costs, and possibly increase leverage. Analysts noted that private miners may have sold a larger portion of the block rewards they received from their mining activities to cover ongoing costs. They also said that these miners may be less leveraged given their more limited access to capital markets. Strategists used the following statements. Selling Bitcoins by miners to cover or roll over ongoing costs could continue into Q3 if their profitability doesn't improve. While there is a risk that this selling pressure will continue, it probably put pressure on prices in May and June. The largest cryptocurrency has dropped more than 50% to date as the U.S. Federal Reserve, Fed, began raising interest rates and inflation remained high. The problems of the asset class have been deepened by concerns about the collapse of the Terra Luna ecosystem and hedge fund Three Arrows Capital. Now the problem is spreading. Decentralized finance, DeFi, projects accept incurring losses. Billions of dollars in Bitcoin miner loans are under stress. According to JPMorgan, there is something that can alleviate price pressures. A drop in production cost from the $18,000 to $20,000 range earlier in the year to around $15,000 this month. The firm said this appears to be related to an improvement in the energy efficiency of mining hardware and could reduce profitability. Estimates of Bitcoin mining cost may vary. According to Arcane Crypto, the production cost for a large mining company is around $8,000 per coin, assuming average electricity prices and fairly new mining machines. But Securitize Capital says that, taking into account the overhead for infrastructure and interest rates, the total costs for some miners could already be over $20,000. Altcoins have been getting back some of the values they lost in the last few days. But Bitcoin and other coins have been relatively quiet over the past 24 hours. BTC stayed just above $21,000 over the last day. More action is coming from some altcoins like ETH, which has bounced to 10-day highs.